what's going to happen in 2026 when it comes to deal sourcing, finding motivated sellers, originating good deals that you can acquire not only in the United States but across the globe? I'm going to share my thoughts after reviewing the year that just finished and kind of like sharing with you the analytics, kind of like some of the things that we've seen in the market, some of the things that we tested in kind of like our predictions for 2026, what's going to happen when it comes to deal sourcing, what are some of the trends that are going to deliver and drive results, and what are some of the fads that people are going to follow, but they're not going to actually deliver any outcome to you. So I'm going to share my experience after sourcing deals for private equity groups, search funds, advisory firms, strategic buyers. You can check out more about what we do on our website. Our company Ulysses helps people originating deals so that they can spend more time closing transactions and execute multi-million-dollar deals. You can go and see our case studies if you're interested in that. But I want to start with the entire process of sourcing deals. So we're going to see, as we head into 2026, a lot more activity happening off market. And that is true because we have seen in 2025 on market deals being very competitive. A lot of big groups or small boutique private equity shops are moving downstream, and they're doing that because the competition in their market is high. And as a consequence, they're trying to mitigate for that by buying smaller assets that other players might not be interested in, so that they can have, access to and get access to quality deals without actually having to outbid other folks that have access to capital. So I see that being a trend as we continue in 2026. Capital is not going to be the issue. A lot of people are going to be moving downstream, and as a consequence, on-market deals are going to be less and less accessible because, again, these folks, these private equity groups, are going to tap into these resources to execute transactions quickly and find all the good gems before they actually hit any public marketplace. So for those of you believing that broker sites or other public platforms are becoming kind of like stale or they don't have any good opportunities featured, that is normal. And that is because most likely a lot of these folks are not listing the good deals because they get sold before they even go on the marketplace, right? So one solution for that might be building a relationship with a few of these intermediaries so that you can kind of like tap into that deal flow before it hits the public marketplace. But that is common practice, is something that you should always do independently of where the trend is going. But I also see a lot of attention going into off-market deals, especially this last quarter. I had a lot of discussions with people that were actively thinking about changing their entire sourcing process and rebuilding it from the get-go so that they can get real ownership of their pipeline. And that is true because a lot of them are realizing that, again, depending on market deals is becoming less and less predictable in nature. Back in the day, it used to be a good way to source deals, but now it's becoming increasingly challenging to do volume or to buy the business that you really desire when you constantly have folks that are outbidding you or they're presenting alternatives to the seller and to the intermediaries. So I saw a lot of folks looking at building their proprietary pipeline, focusing on off-market deals, and I feel this trend will continue, and it will become kind of like the way smart people handle deal flow. It's not like they're gonna completely shy away from on-market transactions. That's not the case at all. It's just that they're gonna create an integrated system where they own their own infrastructure, and at the same time, they leverage on-market deals as they used to do in the past. So it's going to be like a balanced approach where they are getting deal flow from multiple channels. And that, I think, is going to be the tendency. I've seen, again, not only private equity groups, but also small firms trying to build that in-house or build that with us. And so I feel that's going to be one of the key factors determining the success of any project, really. Where are you going to get your deal flow from? Is it just going to be on market? In that case, you're going to struggle. It might take a longer period of time to get a good deal. And if you don't have capital in place, maybe you need to work out creative solutions for structuring a deal. You might lose a lot of transactions simply because a lot of other buyers are going to come in with capital available, and they're going to either outbid you or offer terms to a seller that are much more palatable, and therefore, people are going to go into a different direction. That is not tragic, again, because if you build an off-market pipeline, you can solve for that and kind of like have a system in place that creates opportunities that are just yours. Now, of course, off-market deal flow has its own challenges, and we're going to talk about that, one of which is the fact that it might take you a little bit longer to kind of like nurture that opportunity and kind of have that opportunity materialize into a deal. But some folks generally say, well, I would rather spend a few months rather than a few more months cultivating a deal that I know is going to close, rather than maybe focusing on a listed transaction where I'm going to do a lot of skeleton hunting because people are going to keep things away from me, and maybe I'm committing to a deal that is going to end up not being the transaction that I was hoping to get. So that's the first trend that I think is going to become apparent. A lot of people are not putting enough attention into that. They feel their own network or brokers are going to be enough. That's not the case. I really don't feel that is going to be the case. I was saying this at the beginning of 2025, and I'm going to reiterate this in 2026. A very integrated system is necessary when finding deal flow, because again, otherwise you're just going to compete against everybody, and more players are coming into the market every single day, especially in the United States. Same things are happening across other markets, Europe, Middle East. They're less, I would say competition is not as fierce as the United States, but still we're seeing a lot of trends where people are maybe moving in other markets as well to try to solve for these competition issues. I had a few conversations with groups in Europe that are now targeting assets in the United States because they're seeing competition, a competition increase in Europe, and asset availability in Europe is significantly lower than the United States. So they would rather compete into a market that is super crowded, because at least they know they're going to have more opportunities instead of staying where they are and maybe not get the deal flow that they need. So those are some of the tendencies, like building pipelines that are going to be on and off market. Diversification, that's the first thing, and I recorded a previous video about that. Then if we want to get into the specific of off market deal flow, what are some of the things that people are going to try to do to solve the off market origination problem that I don't feel are going to work so well? Well, during this past 2025, I saw a lot of folks thinking they had all figured out when it comes to off-market deal flow. Had a lot of discussions with people that said, well, we already do our off-market origination in-house. We don't need any support. We just do what we do, and we have a very strong system in place. Some of the challenges that I then saw them face as we catch up 3 months later, 4 months later, 6 months later, were the fact that they tried to automate the system too much, and they ended up looking like just everybody else. So a lot of people leveraged AI too much to try and create a system that could compete with companies that had a lot more staff. And they said, okay, we can use AI to solve the staffing issue, maintain our team and our overhead low, and still get the same result. That hasn't been the case. AI has some functions and some kind of like perks that you can leverage to make the sourcing process smoother, but it's not a substitute for common sense and the right strategy. So what I've seen is that a lot of people over leveraged AI, and now they're creating processes that are just robotic. And so people, especially motivated sellers in this case, are becoming increasingly good at spotting either messages or nurturing processes or conversations that are handled by AI instead of a real human. And as a consequence, you are achieving the opposite outcome, right? Instead of getting the same results at scale through AI, you are burning part of your marketplace because you're just creating something that is not unique, is not personalized. And it is a funny subject because you might say, well, Marco, the whole point of AI is that it helps you be personalized at scale. And there's some truth to that, to be fair. I mean, if we take an example like a guy that I talked with that was doing origination purely through email outreach, he said, well, I don't know why my system is not working. I'm using AI to personalize every single email that I send to a seller or to a business owner in this case, so that it's highly relevant to them. Well, that's fine, but the problem is AI is still not able to personalize messages in a way that it doesn't look weird or like unnatural to the end user. And as a consequence, this kind of like over leveraging of personalization is creating the opposite result. So instead of coming across as somebody who has done his homework, you're coming across as somebody who's just mass spamming AI generated messages, and you basically don't give a shit about the other person. And taking the example of emails, we saw much better results just by having a clean and simple template that will send out identical to a lot of different folks, instead of just trying to force personalization into a process that didn't actually need it, to be fair. And so again, what I will see and what I think is going to happen is that people are going to double down on AI, and they're going to overuse it and maybe misuse it in areas where it's not needed. And as a consequence, they're going to accomplish the exact opposite result that they were hoping for. And they're going to wonder why their system doesn't work. In reality, it might not be the system. It might just be that you're trying to use AI in the wrong way. And as a consequence, you're coming across as just a robot. So people are becoming increasingly good at it. And important point, if you're doing off-market origination, so you're using social media, emails, cold calling, SMS outreach, and you're using AIs to manage these outreach systems, filters and tools are becoming increasingly good at spotting whether or not a message has been written by AI or by a human. And as a consequence, a lot of your efforts might go to waste simply because you're going to be kind of like censored, if we want to call it this way, because AI messages are going to be censored a lot more. Now it's clear, the direction that has been taken. So as people abused AI to some respect, now correction is happening. And I think, again, people that don't adjust to that are just going to get burned, and they're going to wonder why what they're doing is not working. And in most instances, it's because they're using the technology in the wrong way. Now, some other things that I feel are going to happen are the fact that, well, two things primarily. Depending on the type of business that you want to find, the type of assets that you want to source, I think we're going to see two trends. Well, if you're a generalist, I think we're going to go into a direction where it's not appropriate anymore to just send out messages to a huge list of people, but segmentation is becoming kind of like the core foundation of your process. If you are already targeting a very narrow niche, that's good news, because of course you only are going to target a restricted amount of businesses. In that case, I think multi-channel is going to become the trend, and it's going to be the solution that you can opt for in order to tap and touch that list multiple times. So let's break down the two aspects so that I can talk about the two trends that I feel are going to work personally. The first is if you're working with a very big industry, maybe, I don't know, you're buying healthcare companies across the US, independently of the type of healthcare company. It used to be, the beginning of 2025 and even back in the days, that you could reach out with very general messages to people. And to some respect, that approach still works quite well. But we're heading into I would say, a year where segmenting list and kind of like testing different solutions is going to become a key. Now you might say, well, Marco, that sounds obvious to me, but in reality, a lot of people were not doing it. So they were just picking an industry and then creating a solution when it comes to the way they were outreaching to these folks, if they were sourcing off market, of course. And then they were applying that strategy over and over again, hoping to get some results. The thing that I think is going to happen is that it's going to be necessary to break down huge markets into tiny buckets, create something that resonates with that bucket specifically, and test and adapt to market conditions and make sure that message reflects these market conditions. For example, there might be campaigns that are going to work well in this first quarter, but they might not work well the last quarter heading to Christmas season. We saw that being the case this year. A lot of the changes that happening throughout the year affected some of our campaigns. And so we made a lot of mistakes ourselves in the way we were managing our processes, because in some instances we were too rigid in the way we were reaching out to people without taking into account a specific time of the year or specific market conditions. I feel that is going to become even more relevant in 2026. So without becoming a robot and writing messages using AI that are just not going to resonate with the target audience, I think one of the solutions is going to be very deep segmentations of huge markets so that we can create tiny buckets that receive personalized outreach that might not be specific to that individual, but it is specific to that tiny niche, right? So I don't know, cognitive behavioral therapy companies might just be, I don't know, 1,000 businesses across the entire US. So if that is a portion of healthcare, it becomes a bucket that can be targeted in a specific way and will be targeted differently depending on the time of the year, depending what's happening in the industry that time of the year, and so on and so forth. So I think one of the ways we will shy away from this AI kind of like monsters that we're seeing online is that we're gonna segment lists in a very detailed manner. We're gonna create messages that resonate depending on trends and market conditions, and we're gonna cycle through different options much faster. So if there were, back in the day, campaigns or outreach strategies for off-market deals that could work for, let's say, 3 months, I see 2026 to be, much shorter in nature in terms of cycles. So we might have cycles of 1 month, and then we need to refresh the entire approach to reflect some of the changes that happen into that specific marketplace. So that's number one when it comes to a big list. Now I'm heading to small markets. So you might be a very niche acquirer. Maybe you buy, I don't know, calibration and testing companies across the US, not too many businesses in that industry. To some respect, you might say, well, I already solved for that issue because I am very targeted, so I don't need to segment my list. My message can be very specific to that industry. I just need to keep the cycling process in place. I think one of the challenges that people are going to face in that situation, and that they faced in 2025 as well, is list fatigue. Because of course, if you have less business owners that you can reach out to, after some time you might become redundant. And if you're just using one channel of outreach to originate off-market deals, you might become you might look spammy, you might look like not really interested in the other person's goals and objectives, just self-interest in acquiring their company and so on and so forth. How did we solve that in 2025, and how I feel a lot of people can solve that in 2026 and onwards? It's simply multi-channel solutions, right? So instead of just relying on one channel for originating deals, you're going to need to build a system, an ecosystem that connects with these folks on multiple channels. And there are also layers to it, because we can talk about newsletters and other things, and we'll get to that in a second. So one of the trends that I think is going to happen, not only for small list, by the way, but also in big markets, that is something that is going to apply to everybody, is single channel solutions are not going to work anymore. So if you used to source all your deals through cold calling or through cold email, or again, I mentioned before, through brokers in the case of on market, that ain't going to cut it anymore. Because people are now receiving a lot of communications, a lot of messages from people that want to acquire their company. So it's not like we're talking about virgin markets where nobody is actually doing acquisitions, and you can basically reach out to anybody and your message is going to look fresh and new, and the idea kind of like disruptive in nature. That's not the case. So we're dealing in a market where owners are constantly approached by folks that want to buy their business, and they're becoming kind of like I would say satiated by that. So to some respect, in order for you to be taken seriously, not only you need to differentiate yourself in the way you reach out. So again, we talked about personalization, we talked about market segmentation, but you can also put an extra onion layer on it by reaching out on multiple channels, because that is going to increase your level of visibility to also enable you to tap that person multiple times without sounding spammy, because you're not just blasting him 10 emails in a row, and nurture the relationship for a longer period of time. So for example, if you had a cold calling strategy for finding off market deals, maybe you were calling these people, let's say once a week or maybe once a month, depending on the size of your list. If you keep calling these folks, after some times that they said no to you, they might sound annoyed by it, and they might also tell you that they didn't want you to call them anymore. Maybe they even block your number. Same thing happens to email. They might mark you as spam, or an email they might block you, whatever. The point is, if you're just using one channel, you might sound kind of spammy and pushy, while instead, if you're tapping them on different channels, you can always continue the conversation without looking too spammy. And at the same time, you can show a higher level of interest, and people will perceive your level of interest as being significantly higher, because they said, okay, this guy took the time to actually reach out to me on different channels to find my information, and then do some research on that, and kind of like connect with me in different places. And if this strategy itself is well structured, you're going to get results that can compound over time, because that is not something that might pay dividends right away. Of course, you need to allow for some time, for the pipeline to catch momentum, but ultimately multi-channel is going to be the way, and it's going to enable you to solve for some of the issues that a single channel cannot really address. I'll give you the example of email. Let's say that you do a outreach campaign to business owners, and you decided you want to do a 3-step sequence or 5-step sequence, whatever. Generally, we do 3-step sequences because it works best. You do that, and let's say you split it across 10 days. What happens then is, if that list goes through that process for 10 days, then you have a lot of people that are not going to reply to you. So what do? Do you email them again? Well, if you do that, as I said, you might look spammy because you just reach out to them. So, they're gonna say, "What the fuck? I haven't replied to you. Maybe I'm not interested, or maybe I'm thinking about it, or maybe I just don't want to reply. You're catching me in, at the wrong time, or maybe I just don't reply to emails." By the way, so you then need to wait for some time before you can reach out to these folks again. Generally, we wait for 30, 60 days to then recycle the list through a new campaign, depending on the industry, depending on the strategy. Now, what do you do over that 30, 60 days? Are you just going to put that list on hold and wait for it? That sounds kind of ineffective, unproductive. And there are actually better ways to keep people in the loop and maybe try to connect with them in a different way, in a more creative way. So if after that 10 days, maybe you have a LinkedIn process or a call process or an SMS process that keeps reaching out to these folks, you can increase the chances of them responding, not only because you're pinpointing the channel where they're more likely to respond, but also because you're showing that you really care about connecting, because you're trying to reach out in different avenues. You just didn't pick one channel and try to spam the guy until he replies. So multi-channel, I think, is going to be the way to go about doing things. It's going to create a very healthy cycle where you can have, again, let's say email, LinkedIn, SMS, call in sequence, and then repeat the cycle again, 45, 60-day cycles, and they keep rotating. So even if you have a small list, you can run it through the process, and you're always going to look fresh and new, because if they receive, let's say, the email campaign in the beginning, then they go through other channels with different campaigns later. After 60 days, you might tap the list again via email with a completely different copy that, again, has been adapted to the market conditions. As I said before, after 1 month, we might want to create new ideas that can be more relevant to the industry. So you're constantly going to add creativity to the mix, and you're going to keep in contact with these folks in a very unique way. And ultimately, what happened to us in 2025 is that a lot of folks then said, well, I received all your messages. It wasn't the right time for me. Now I'm ready to talk. And you're the person that I felt, was right for us to connect with, because you try to connect different times on different channels. So we saw you as the most committed one. So, you kind of like already have an advantage from that perspective, even in competitive markets, because people simply aren't going to do that type of work. They're just going to say, well, let's find some deal flow through cold calling, or let's find some deal flow through email. And that is the case for even big companies that have a lot of allocated capital. I mean, I had a lot of discussions with some folks that just believe their way of doing things is the right way, and they're just going to stick to one channel because it worked for them in the past, without realizing that there's a lot more that they're leaving on the table, and they could find a lot more deal flow, especially off market. So again, I talked about segmenting lists more effectively, creating strategies that are multi-channel in nature. Those, I think, are some of the trends that are going to happen, and people that don't do these things are going to be wondering why they're not able to get deal flow. Another thing is, I feel a lot of people are going to progressively transition to models that are more flexible in nature. And again, this is maybe my own self-interest talking, but I feel a lot of people are realizing the fact that sourcing deal flow by themselves, even if they're a small team, is significantly more draining than they thought. And then when they get a transaction or multiple transactions that they want to close, in order for them to maintain focus high, they need to allocate all their time to the deal. And so their sourcing process stops. So they create this kind of like inconsistent cycle. And I think a lot of people are going to move to a system that it might be outsourced for originating deals, or maybe a partnership with somebody that's find the transactions for them, and they just focus on what they do best, which is close.